In this video, I'm going to tell you guys exactly how to earn $100 per month in dividends. A little bit of background on me, I'm currently 30 years old, and I have been building multiple dividend stock portfolios for many years now. I currently actually earn over $6,000 in passive income every single month, and although the goal of earning around $100 per month in dividends might seem out of reach for you, I'm going to share with you guys exactly how to make $100 in dividends every single month, how much money you're going to need, and what ETFs you can invest into. Now, the first ETF, and one of the easiest ways maybe to get to $100 per month in dividends, would be by buying into the JEPI ETF. The JEPI ETF is JPMorgan's Equity Premium Income ETF, and it's an exchange-traded fund that seeks to provide income and capital appreciation by investing in a diversified portfolio of equity securities, primarily U.S. large-cap stocks, as well as selling covered call options on those holdings. So in simple terms, JEPI ETF invests in a basket of stocks that are selected based on certain criteria, such as things like market capitalization, liquidity, and financial performance. The fund manager then sells covered call options on a portion of the stocks, which generates the fund quite a bit of premium, which then is paid off to the shareholders of JEPI. The JEPI ETF currently has a trailing 12-month dividend yield of around 11.47%, which is very high. It's much higher than the S&P 500 and even much higher than most dividend aristocrats out there. Now, the reason in theory this would be a good option to go with is because if the investor was looking to generate $100 per month in dividends with the least amount of money as possible and not invest into an absolutely trash ETF or stock, JEPI ETF doesn't meet most of the criteria. Now, the reason I say that JEPI meets most of the criteria for the investor out there that wants to make $100 per month in dividends, this is because JEPI's total return isn't all that bad. For a very high yielding ETF and or stock out there, you're going to normally see quite a lot of decay in the share price or the ETF price over time. But when it comes to JEPI on multiple time frames, and keep in mind JEPI has not been around all that long. JEPI's only been around 3 or 4 years. But for the last year, total return, this is with dividends included, JEPI's earned minus 1.76%, where the S&P has earned minus 6.79%. On the 3-year time frame, which is basically how long JEPI's been around, JEPI's earned around 40.93%, where the S&P has earned 60.73%. Now, I know what you're saying. If the investor 3 years ago would have invested the same amount of money in JEPI and the S&P 500 and just not worried about dividends, not worried about cash flow, they would have had more money at the end by just buying into the S&P 500. And this is exactly right. This is why the S&P 500 is so popular, and for good reasons. The S&P 500 is made up of the best companies in the world, and that's why it's so dang tough to beat the S&P 500 in almost any time frame. But for the investors out there that don't have the strategy to make the most amount of money in capital appreciation long term, for those investors that just want to get to cash flow and want to get investment vehicles to start covering their bills, to pay for their cell phone bill, and then hopefully for one day to have the dividends cover their mortgage or their rent, there's other investment vehicles like JEPI that could definitely meet this criteria. So now going into the math, if the investor wanted to earn $100 per month with the JEPI ETF, they would need to invest into 222 shares or so. And this is because as of the last dividend, JEPI paid around 45 cents per share per month. So if you know that you need 222 shares of JEPI in order to earn $100 a month in dividends, you would multiply 222 times the price of JEPI, which is $54.34 per share. This means in theory that you would need around $12,063 into JEPI ETF in order to earn a consistent $100 per month in dividends. The next way that an investor could earn a steady and growing $100 per month in dividends every single month is to invest into a number of the SCHD ETF. Now, SCHD, or the Schwab U.S. Dividend Equity ETF, is an exchange-traded fund that invests in U.S. stocks that pay dividends. This fund seeks to track the performance of the Dow Jones U.S. 100 index, which is comprised of 100 high dividend yielding U.S. stocks. The fund is designed to provide investors with exposure to high-quality, income-producing companies that have a track record of not only paying consistent dividends, but also raising these dividends over time. These companies are selected based on the ability to generate sustainable income and their potential for long-term capital growth appreciation. So the way that this ETF works is by pooling money from investors and using that money to buy a diversified portfolio of stocks that meet the criteria for inclusion in the Dow Jones U.S. 100 Dividend Index. So when it comes to SCHD, the investor would have to invest quite a bit more money into SCHD in order to earn that consistent $100 per month in dividends. But the difference with SCHD is that the investor's total return will likely be much higher if history were to repeat itself. Now, SCHD's trailing 12-month dividend yield is 3.62%, and it pays around 60 cents per quarter or around 20 cents per share per month. But the real difference here is pretty obvious. If you chart out SCHD next to the S&P 500 and next to JEPI on a 3-year time frame, it is very obvious which the winner is as far as total return goes. So this is the share price plus dividends included. So even though JEPI pays a much higher dividend yield than S&P and SCHD even combined, SCHD's total return is going to absolutely crush their total return that you would receive from JEPI and the S&P 500. And again, this is only on a certain time frame. Anything in the future can happen. But just looking back in history, the investor would have had a lot more money if they were to invest it in all 3 of these different vehicles at the same exact time around 3 years ago. So now for some simple math. If you wanted to earn $100 per month with the SCHD Dividend ETF, you would need to purchase around 500 shares of SCHD. Now, SCHD currently costs around $73 per share, more or less. So multiply that by 500, and you would need to pay around $36,500 into SCHD in order to hit that goal of $100 per month in dividends. If you are an investor out there that really wants to get your dividend income up in your portfolio, the best thing to do, in my opinion, is to have a diversified portfolio with different investment vehicles that really meet the exact needs for your given strategy. We all have different needs and wants and strategies when it comes to investing, so make sure you make your own strategy and stick to it long term. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.